Now, have you ever wondered how much energy the world's fastest growing economy would need over the next few decades? And has it ever crossed your mind that a growing middle class will have energy demand shooting up for air conditioning, for electric vehicles, and so much more as we aspire to grow? So the question that we're asking tonight is, does India have a plan in place to meet its growing energy needs?
The Power Ministry has asked all states and DISCOMs to take necessary steps in order to meet unprecedented power demand in the country. As per the Power Ministry's data, power demand has touched all-time high of 241 gigawatt during first week of September. In fact, it has increased by 23% during the month of August, which is one of the highest in the world. But the big concern for the government at this point of time is that some states are not able to meet high power demand, especially during night. Power shortage has reached to 10,000 megawatt during night, which is a big concern for the government at this point of time. Power Ministry is also saying that below normal monsoon has led to high power demand, and depletion in reservoir levels is something which is a big worry for the government, as it is not able to generate sufficient hydropower in order to make a balance. Apart from that, Power Ministry is also expecting to have higher power demand going forward. Taking all into consideration, Power Ministry has now asked all states to make necessary arrangement. In fact, it has already taken some emergency measures. All power generation companies have been instructed to import at least 6% coal for blending purpose. All gas-based power plants will have to be operated with immediate effect. Apart from that, when it comes to imported coal-based power plants, they will have to operate with 100% capacity for another 2 months. In addition to that, all states have been told to shift agriculture load on solar power. Meanwhile, Power Ministry has approached Ministry of Coal and Railways to speed up additional coal supply to the thermal power plants. But an interesting fact which needs to be taken into consideration is that Coal Ministry has maintained that there is sufficient coal stock is available with to the thermal power plants in order to meet any power demand. But Power Ministry data tells us different story. But the fact is that power demand has touched all-time high, and we are witnessing power shortage during non-solar hours.
Demand is certainly going up. When there is demand, of course, someone will always step up to meet that demand. But, of course, there's going to be a cost to it. And what exactly is the cost? Are Indian consumers ready to shell out more for energy in the next 3 to 5 years?
Any services or supplies that go into the transmission and distribution, I think transmission is seeing an upsurge with some very, very big capex, including, one of the biggest capexes in the country. About 30,000 crores is a transmission line from Ladakh to Sonepat in Haryana. Similarly, to connect renewables capacities which are coming up in very remote areas, in the deserts, in central India, a huge amount of transmission work is happening. And with the focus on distribution companies to increase their efficiency, from transformers to wires to installation of smart meters, there is a huge demand for smart meters. So I would advise people who are looking at, companies to actually, in the power sector, focus on companies who are developing renewable power and all the services and products that go into transmission and distribution. That would be my view right now. Faced with a demand surge with a supply shortage. So the apprehension in industry, which is the largest consumer of power, is that in the short to medium term, and I say this, which is from now to the next 3-4 years, you are actually going to see an increase in power rates, particularly in merchant power rates, in the power that is traded, as well as fresh PPAs. You're going to see an increase in power rates, and that is something that Indian industry needs to be prepared for.
So higher tariffs are a given, according to that particular view. Now, demand for power being at an all-time high, this is only going to rise as the Indian economy picks up pace. It also means this could be an opportunity for investors.
And we at IIFL think that one should have a balanced approach. Bit of utilities, which is NTPC, Power Grid, and maybe Torrent Power, could be a good formidable combination along with some of the food chain companies which will emerge one of the biggest beneficiaries. And there are quite a few of them. Maybe Cummins could benefit. The order inflow could be very strong for companies like BHEL. Companies like REC, PFC will also end up benefiting because their loan book will keep on growing as the capex in the sector increases. So there are multiple ways. I think it's better to have a balanced portfolio when you're trying to play the power sector theme.
Well, power has its advantages when you look at the action in the equity markets. But how will the surge in power demand impact power companies in our equity markets? We have a take on this from Nikunj Dalmia, the managing editor here at ET Now. He's decoded it for us.
So let's simplify it for our viewers. One is the impact, and second is individual stocks. What has happened is, because August was a very dry month this time because of delayed monsoon, and the air conditioning penetration, our comfort which we require in terms of electricity demand, all that is increasing. As a result, in the month of August, the electricity demand has shot up, and there seems to be a mismatch in what the total installed capacity is versus what the sudden demand is. Now the sudden demand could be erratic, and that may not sustain. And now that things are normalizing on the weather front, the demand will come down. But meanwhile, when you see such a large uptick in demand, what happens? Indian power sector, Avan and Aisha, I'm going to try and simplify it for our viewers. Hope I'm able to do that. You have utilities, NTPC, Tata Power, Adani, they generate power. They're power utilities. They sell by two routes. One is PPP, which is that you've entered into long-term agreement with the buyer, and that is a fixed contract for many years. And 75 to 80% of the broad capacity in India is locked in that. Remaining is what is called as you can sell in the open market. That is what you use. That is called as merchant power. Now the demand has gone higher. You cannot change the price at which long-term contracts have done, but you will definitely get an advantage in terms of merchant power pricing. So companies which have a high exposure to merchant power pricing are the ones they will hit a jackpot. Why will they hit a jackpot? Because your realizations will just go multifold. Your cost of production is same, your realizations they go higher. What happens? You make more money. So the theme to buy, I think for next couple of days would be companies which have a high exposure to merchant power. And I think that is a theme which I think could be a warm theme, could be a charged up theme. Some stocks have run up, but looking at the way our trend is moving, I think we are in for a bumper quarter for companies which have a high exposure to merchant power.
So yes, merchant power is something that one should focus on looking at the equities. But clearly, on the 1st of September, power demand has scaled that fresh peak at nearly 240 gigawatts. And the reasons are, we've had these humid conditions we were speaking about amidst this deficit rainfall that we've been suffering, and there has been more economic activity as well. So how do we resolve this problem, considering the impact of climate change? That's not going away anytime soon. Our economy is going to keep growing, no doubt. So to discuss this, former Power Secretary Anil Razdan is with us, along with Rupesh Sankhe. He's the Vice President for Research at Elara Capital. Gentlemen, thank you very much for joining us this evening. Anil Razdan, first to you. India clearly now seeing its widest power outage in a span of 16 months. And it's not just power from coal, sir. Even wind and hydro energy output has gone down. So we have this yawning gap between demand and supply, and that gap is widening. Tell us, in your understanding, why we have this scenario of shortage in power to fuel our growth. We don't have enough, clearly. And the obvious question is, didn't we see this coming? I mean, growing economy is definitely going to need more and more power to keep all the economic engines charged up.
You're right. I wouldn't say that the outages have gone up. The outages are certainly not gone up. But the demand is certainly kept at a very high level. And the reasons are obvious. Number one, we've had a very hot summer. Global temperatures are rising. Number two, rainfall has not been uniform in the country. Particularly, I think in the south, it has been low. The reservoir levels are far below their previous capacities. Then wind has been a bit of a disappointment. This time, I'm told that the wind generation availability has been a very small fraction of its installed capacity. Now, when we are pushing for renewables, I think we have to keep this in mind that renewables always need backup power if you have to rely on them. The shortfall varies between the solar hours and the non-solar hours. Solar generation has been better, but non-solar, which depends more on wind also, that has been lower. Hydro in the north has been good, but we've not been adding too much hydro capacity. And I think in the years to come,
Yes.
water consumptive use is going to be a major factor.
Sure.
Crops do require waters. We should be very careful when promoting some crops which are water intensive. And I'm one of those who's not been a great votary of the ethanol,
Blending. Yes.
I should say, market. Because yes, ethanol prices keep going up, but in countries like Brazil, sugarcane is a rain-fed crop. In India, you're a water-scarce place in most of the areas in the north, at least, barring a few places on the coastal
Yes.
regions or in the Terai, which may be entirely
Yes.
rain-fed. So we've got to do an intelligent balance. Then buildings also today, the way they're built, multi-storied buildings, there is increased demand on air conditioning.
Yes.
Lifts are operating in multi-storied buildings. No building can operate without electricity, whether for climate control or for, I would say, communication.
So would you say, sir, that we need to control our demand, or do we need to up our capacities in terms of supply?
Both. We need to be careful, balance the two.
Yes.
Because demand side management has always been a priority for the last 20, 30 years. Energy efficiency
Yes.
comes out of that.
Mm-hmm.
So when you are looking at gadgetry, I fail to understand that why don't we provide a tax relief for the multi-star rated products,
Right.
so that we send the right signal.
Sure.
Electricity bulbs, as you know, LEDs have done a revolution.
Yes.
If they had not come into being, our power demand would have been much higher today.
Yes.
So
Also,
it's
sir,
a
our backup,
totally
you mentioned that our backup to our renewables, that tends to be coal-based again. So that kind of creates that much more pressure on coal-based power production. But let me take this across to Rupesh Sankhe as well. Rupesh, yes.
I think the backup also has to be, say, 1 hour battery or some hydro-linked backup.
Yes.
You can't say that you want it only coal-based, because gradually when you want to bring it down, you have to either push up nuclear as a base load.
Indeed.
Nuclear, we've been shying away from the debate.
Yes. So
I
let me
wish
take
we had
this,
done
sir, let me take a moment and take this across to Rupesh Sankhe as well. Rupesh, our power usage, like we were discussing, it went up in July. The demand has touched record levels in August because of the rain deficit. And then in direct correlation, we've seen the stocks of power companies touch new highs as well. You think they're going to continue to rise? And do you think investors should park their money in power stocks for the long term?
Say definitely, if you look at the plant load factor of the power companies in 2010 was close to 75-78%. And there was a power deficit of around 10%. And most of these companies were generating better earnings. The return on equity was very high at 18-19%, and price to book value, these companies were enjoying close to 2 to 2.5x price to book value and close to 10 to 11 kind of PE multiple. Now, if you look at that valuation with the compared with the today's valuation, I think we are approaching the similar kind of the dynamics, like better ROE, better incentives, but our multiple is still at a lower than the historical average. So most of these companies are trading at close to 1.2, 1.3 times price to book value, despite having a better operating cash flows, better ROEs at close to 17%. And going ahead, capital allocation will be better because of this green transition, all the conventional players are getting benefit out of that. If you look at the capacity addition target for NTPC on the renewable side is around close to 60 gigawatt, which is currently at 2 gigawatt only. The same is the case with NHPC, HJVN into hydro space. So all these conventional players are getting benefit of the green transition happening. So we do believe that these companies with a regulated equity, regulated growth addition happening from the capacity side, I think these companies will continue to get the better multiple and will continue to deliver the better performance from the current level as well. So we are betting on these companies like NTPC, Tata Power, NHPC, HJVN at this current valuation.
That makes sense. And Mr. Razdan, in fact, I was reading some media reports as well, which was suggesting that India is seeking additional volumes of natural gas and now has asked utilities to expedite the completion of these maintenance of power plants as part of that emergency measure to stop power outages. Already, of course, the government has extended that emergency law to ensure that power plants that use imported coal, they run at full capacity for the next 2 months until October. So are these measures, you think, going to be good enough to tide over this current power shortage that we are facing, or do we need to look beyond and perhaps be a little more far-sighted?
I think we have to be certainly a little more far-sighted. For baseload power, we do need nuclear if we want to keep up our global warming imperatives with us. But you see, the story for wind and gas, unfortunately, in this year has not been very good. Against the installed capacity of about 44 gigawatts in wind, I'm informed that the output has only been 3 gigawatts. And similarly for gas, against an installed capacity of 25 gigawatts, the maximum generation has been about 8.7 gigawatts. So there is a lot of capacity that is idling. Or in wind, we've not been able to get the right wind conditions. We need to do certainly an audit to find out what really has happened. But with infirm power, like wind and solar renewables, you certainly need a lot of immediate backup or hand-holding power. There's no doubt about that.
That's right. And we don't seem to have worked on it to be able to create those capacities right away, to be able to dip into. Rupesh Sankhe, the long-term plan is to have more renewable energy plants moving, more thermal power plants. Do you see a lot of government capex and private capex bringing those plans to fruition? And if so, which companies would you suggest are going to be the bigger movers and shakers to get those additional capacities for power generation?
Yeah, definitely. If you look at because this is the balance companies with a strong balance sheet are going ahead with the big capex program. So definitely NTPC is there, which the company plans to take their renewable capacity from 3 gigawatt currently to 60 gigawatt. So that company is certainly getting benefit out of that. Now, if you look at the national electricity plan, which the report which was out, by 2030 we need a hydro capacity of around 20 gigawatt from the current levels. So there are only two players which are adding capacity on the hydro space, that is NHPC and HGV. So these companies also entering into renewable energy in a big way, and they have got the regulated asset in place. And those companies are trading at the below close to 1 times price to book value, despite 19% ROE and strong operating cash flows and growth visibility is there on the capacity addition. In addition to that, we believe that IEX is there in the ancillary services will get continue to get benefit of increase in short-term volumes from long-term to short-term volumes, and that companies at the same time PTC India, which are into trading and bilateral trading market, will continue to gain benefit out of that. So I think these companies as well as a few companies on the private space like Tata Power, JSW Energy, they are entering into big way on the and the energy vertical like battery storage, pump hydro storage, both the solar and wind, and also they have a strong operating cash flows from the existing regulated assets, and they are also play with the short-term demand-supply mismatch in form of merchant route. So those companies also will get benefit from this the large capex there in next 2030, where we want to add capacity of around 400 gigawatt from currently 430 gigawatt, almost doubling capacity from the current level. So these companies will continue to get benefit from the green transition.
Well, that's for the future, and we look forward to it. with great enthusiasm. But for the moment, when there is this kind of demand-supply mismatch, one can expect a hike in tariffs. And that is going to have an impact on the inflation picture right now, even as crude oil prices are rising. So how much of an impact that's going to have remains to be seen. The RBI has a task on its hands when it comes to power output as well. And we'll keep monitoring it. But for the moment, that's where we're leaving it. Anil Razdan and Rupesh Sankhe, many thanks for joining us with your perspective on this edition of India Tonight. Great to have you with us.